Hey everyone, and thanks for jumping back into the macroverse. The Fed is slowing down quantitative tightening, and I just want to talk about what they said today and what to watch for over the coming months. So if you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Well, let's go ahead and jump in. So the press release today at 2 p.m. Eastern had a big change in it. Basically, right here, you can see that it says the committee will slow the pace of decline of its securities holdings by reducing the monthly redemption cap on Treasury securities from 25 billion to 5 billion. Now, this is not the first time that they have done this. They actually did it, I believe it was last May. So if we go over here back to, say, 2024 and read the press release from the April-May meeting, you'll see back then they reduced the Treasury securities from 60 billion to 25 billion. So this is not the first time they have done that. And so we'll actually look at the chart to see, well, what happened the last time they did this? So this time, or back in May of 2024, they said they were going to reduce their Treasury securities from 60 billion a month to 25 billion a month, but that it wasn't actually going to start until June. So again, FOMC was in May, and then the following month, we were going to reduce the pace of runoff from their balance sheet by about from 60 billion to 25 billion. Now note that in that same FOMC release, they also said that they would maintain the monthly redemption cap on agency debt and agency mortgage-backed securities. So this is MBS. All right, so we'll just call this MBS in the future, mortgage-backed securities at 35 billion. So there has been a little bit of I think some miscommunication on Twitter. Why should today be any different than any other day? But if you look at this, I think some people are sort of interpreting the move from 25 billion to 5 billion as, some type of major reduction, right? Like an 80% drop. And it is for Treasury securities, but that's also excluding MBSs. Right, that's also excluding mortgage-backed securities, and so it's not quite the same drop that you maybe thought initially. Okay, so if you think about it, from 25 and 30, that gets you to 60 billion, and they're reducing it by about 20 billion. So it is a big drop. It is a big drop, and essentially what it does is it expands the runway, as Powell says, right? It leads to a longer runway, meaning that it can go on for longer, as Powell said, slower for longer, but he also said that this is a common sense adjustment. The closer you get to the actual end, you sort of slow down into it. So quantitative tightening does continue, but this is still a substantial drop in it, even if it's not as much as it initially seems once you include mortgage-backed securities that are still going to be maintained at 35 billion. One of the interesting things that Powell said, though, about MBS is that he basically said that they want the MBS to completely roll off their balance sheet, right? They're not even necessarily looking at slowing that one down anytime soon. I think at some point they would like to get to sort of like delta neutral, where their balance sheet isn't really going down, it's not really going up. But ultimately, I think they want to get this one off their balance sheet eventually. Okay. So going back to the summary of economic projections, the Fed has decided to maintain the target rate at 4.5%. No big surprises there. I mean, that was more or less the expectation going into this, that interest rates would stay at 4.5%. We talked about this yesterday. There was a 99% chance that was going to be the outcome. Let me reload this and see if anything's changed or if it's even updated yet. It still hasn't even really updated yet, but if you go out and look at probabilities, the next rate cut, at least according to CME Group, the earliest it would likely occur wouldn't even be until June, right? So the FOMC is not projected to lower interest rates at the May meeting. There's only about a 20% chance or so, at least as of this time. So what's interesting, though, is we know that the Fed has slowed the pace of quantitative tightening in the past. So what I was thinking is why don't we go back and see what happened the last time the Fed slowed the pace of quantitative tightening? And maybe that'll give us some insight into what could happen this time. All right. So, this meeting, the last time they slowed QT was actually in May of 2024. So, quite a while ago. Quite a while ago. If we look at it on a daily time frame, let's actually nail it down to the day rather than first look at weekly candles. So, if you go to May 1st of 2024, that actually corresponded right here, right? May 1st. So there was a rally. It also, back then, it actually marked a local bottom. Now, one of the things to note back then is that the market did eventually go lower later on in the year as you got out into the third quarter of the year. So I don't want, this is not exactly the same thing. I mean, there are some differences. For instance, right now, Bitcoin's below the bull market support band. Back then, it was actually above it, so it didn't have to fight to get back above it, whereas this time it does. It's already fought once with it and failed, but just note that that is something to consider. And what really I'd also like to look at is what happened with the S&P 500 back then in May of 2024. And you can also see back then that, the market, it looks like the market went, basically it held support at the bull market support band. Today, it's below it, right? So again, it's not exactly the same thing, but we have talked a lot about how going into the second quarter of the year, we likely will see some renewed strength. I've mentioned many times that any weakness would likely, the majority of the weakness will likely be between February options expiration and March options expiration. And March options expiration is just coming up within a few days, right? Within a few days. I could see it the weakness lasting until, say, mid-April. But I feel like the easy part of the move is just between February options expiration, February OPEX, to March OPEX. It's hard to know if there's going to be sort of another rundown into April. If there is a rundown into April after, say, a brief reprieve, then it would likely be, the narrative would likely be due to tariffs that potentially are going into effect in early April, and also maybe just getting another labor market print and inflation print. A lot of times in history, the market will find at least local lows around mid-March, but there are some times where that weakness can extend until the end of March or early April. But normally, by the time you get further out into the spring, there's a more sustained rally in the market. Whether it leads to new all-time highs or not is obviously a different story to talk about, but that's the way the markets normally work, is that you see some type of low between mid-March to early to mid-April. And really, a lot of times the low is in March. More often than not, the local low occurs in March, not April. But the only reason I mention April, there are a few times in history where it ends up being April. I mean, if you look at the S&P, even in the pandemic crash, I mean, the entire basically pandemic crash occurred between February options expiration and March options expiration, and that low occurred on March 23rd, right? And it's March 19th right now. So that'd be another 4 days. If you go back and look at 2022, you can see there was sort of a bottom right here around mid-March, and then there was a rally into late March that ultimately formed a lower high. Again, a rejection just above the bull market support band. But you can go back even further and look at prior times where the markets ultimately found support, a local low at the very least, sometime around mid-March or early April. One of the times where it took until April was April of 1997. Weakness in the market still began in late February, just like it did this year. And then there was a lot of weakness in 1997. Then there was a bounce right here around mid-March. And then ultimately one final or two more drops going into about that mid-April timeframe, probably lining up with, some of the big macro events of the day. And then the other time that there was weakness that persisted until April was actually right up here at the, back in 2000, right? There was a drop in March, and then there was another drop out into mid-April. So again, I'm sort of thinking that if there is further downside, right? If there is further downside in the short term, it would likely happen sooner rather than later. sometime between now and mid-April. But do note that at least the last time the Fed ended QT, it did lead to a nice bounce, at least within a couple of months or so. There's been also, if you look at the data and you look at the number of stocks that advanced a few days ago, 2 days in a row, I believe 50% of the time the stock market is lower 2 weeks later. So 50% of the time it's higher 2 weeks later, but about half the time it's lower 2 weeks later. But then 100% of the time, going back several decades, the market was higher 2 months later. Again, there's no such thing as a risk-free trade, but it is interesting to note that we've seen similar setups before. Half the time within 2 weeks, the market was lower, but all the times we saw in prior decades was the market was higher 2 months later. So we'll see what happens with that. Now, obviously, I know a lot of people are interested in how does this affect things like Bitcoin dominance and all Bitcoin pairs, and so we might as well just go take a look. Going back to Bitcoin USD. Remember this drop on May 1st, right? If you go look at May 1st, that also happened to correspond to labor market releases at the beginning of the month. So it's hard to know exactly what data point occurred that led to that. But what you'll notice is that there was an initial bounce. And then there was weakness again, right? There's weakness again. So that's what I would look for. If there is another drop into early April, that weakness is getting pretty far out in terms of the window of weakness that we talked about over a month ago between, say, February options expiration and March options expiration. So keep an eye on that if it in fact plays out. But I do want to at least briefly mention alt Bitcoin pairs. I was looking previously at when this happened for alt Bitcoin pairs. You guys know my bias. I've said it many times. It's kind of a tough thing to hold on to because I don't really want to be the bad guy when it comes to altcoins. I'd much prefer to just focus on other things. But anytime there's obviously changes in monetary policy, I do feel some obligation to at least talk about it because I know a lot of people have followed this view. And so far, technically, it hasn't been wrong. The last time that the Fed slowed quantitative tightening, May of 2024, was right here. And what's interesting is when it occurred, alt Bitcoin pairs were just below the bull market support band, just like they are right now. And ultimately, they got rejected by it and then went down into the month that the Fed actually slowed QT. Remember, if you go back to the press release back then, they said they were going to slow it in June, but this was released in May. This time, they're going to slow it in April, which is still, again, it's about 2 weeks away or so. So I am curious if you see that play out again, because remember, last year, there was a rally by alt Bitcoin pairs in December, January, and March. This year, it has also been December, January, and then, of course, March. And then there was weakness last year by alt Bitcoin pairs in February, just like there was right here. And then there was also weakness again in April. So I'm curious if we will actually see, some devaluation of alt Bitcoin pairs going into April, which, again, last year we saw was a weak time for alt Bitcoin pairs. And then maybe once the actual slowdown occurs by the balance sheet, then you might find renewed strength by alt Bitcoin pairs for a while. Again, I don't know if it's going to play out like that. I just know that, technically speaking, we're still getting some form of quantitative tightening, and it's higher than $5 billion a month, like I've seen going around on Twitter, because they're just looking at Treasury securities. But really, if you add in, agency debt and agency mortgage-backed securities, it's another $35 billion on top of that. So QT continues, albeit at a slower pace. You could argue that had they not slowed QT back over here, perhaps alt Bitcoin pairs would have already gone to the range lows. But it was the fact that they slowed it down, which is probably what's making it so that this bleed by alt Bitcoin pairs has been a lot more painful than perhaps it otherwise would have been. Maybe if they continued QT at the same pace, perhaps alt Bitcoin pairs would have already gone to the range lows. But they haven't, and instead it's just been more or less a slow bleed. And if you look at this on a weekly time frame, it actually kind of tells an interesting story with Bitcoin USD, because if you look at it May 1st, what you'll notice is that on a weekly time frame, right? On a weekly time frame, the week that they the week that they ended, or they announced a slow to QT, there was a little bit of a rally, and then there was one more drop, and then the market went up. But remember, when you look at it on a daily time frame, it looks a bit different, right? Again, on the daily time frame, we know that the market saw that low on that day, right? But that was actually just a wick, and then it spent more time down there a little bit later on. So what I want to at least communicate is that when the Fed announced a slowdown to QT last May, the initial reaction was up initially. And then there was another window of weakness that occurred like 1 to 2 weeks later. And then a more durable rally happened. That's what happened last time. Okay? So, I don't have a crystal ball. Obviously, I wish I did. But I think the point to consider here is that if there is weakness going into these tariffs in early April, that might actually be a distraction from what could actually be occurring with the slowdown of QT. Because alts might like, at least temporarily, the slowdown of QT once it actually happens. Remember, last time they announced it, alt Bitcoin pairs went down. And then once QT actually slowed, then alt Bitcoin pairs got a little bit of a relief. And they basically stayed at that level all summer until October when they went down again. Now remember, in the 2017 cycle, alt Bitcoin pairs were at the range low in November. I know that sounds crazy, right? I know that sounds crazy, but they were actually at the range lows in November. So if you actually put a line on this chart at the very beginning of November, that's right there. That's where they were, right? That's where they were in November of 2017. Alt Bitcoin pairs went to the range lows. And I wonder if it's going to play out like that, where like, alt Bitcoin pairs get another drop in April, and then maybe they find a little bit of renewed strength for a while, and then ultimately they go down here, and then you get a larger move up, later on, right? Like maybe the end of 2025, early 2026. I don't really know. I mean, if it's going to play out the same way as 2 cycles ago or not, but is at least a consideration to make, that it could play out like that. Now, some of you guys might be upset the idea that alt Bitcoin pairs could go back down again, but at least the consolation is that if they do, and if it does play out like the last time the Fed ended, or the last time the Fed slowed QT, it could be on a Bitcoin rally rather than a Bitcoin dump. If you look at alt Bitcoin pairs in May of 2024, initially, again, the markets went up for like a week or so, and then they had another period of weakness, and then Bitcoin got a bigger rally, but during that bigger rally, altcoins could not keep up, okay? So, again, I don't have a crystal ball. Maybe the low for Bitcoin is already in for a while. But if it were to play out, there could be another area of weakness in a week or two as we get closer to tariff announcements and the macro data, and then a more durable rally a little bit later on in the spring, if it were to play out like the last time the Fed announced an end to QT. The other thing to consider too that actually occurred recently was the Bank of Japan's meeting, and they actually came out and said they are not raising rates right now, which is a good thing for alt Bitcoin pairs. But remember that there is a good chance that the Bank of Japan will raise rates again in the 3rd quarter of the year. Now, some of the people on that committee have sort of alluded to that maybe they'll wait until January of 2026 to raise rates again. But just know that there is a likelihood, a decent likelihood, that the Bank of Japan will raise rates again around July. Okay, plus or minus 1 month or so, but around July is currently what some people are sort of forecasting. And so just keep that in the back of your mind, because the reason I say that is because the last few times that the Bank of Japan raised rates, it wasn't really a good thing for alt Bitcoin pairs. And so that's still a little ways off, right? We have April, we have May, we have June, and then July, so it's 4 months from now. But that could ultimately, be something that we're going to be talking about more so this summer, is the next Bank of Japan raise in interest rates. But again, I don't really expect it to be an issue right now. I think one of the reasons they're not doing it right now is because they just did it last meeting in January, and they already said they're not going to do it every meeting, but also because all this uncertainty with tariffs. What effect will that have on the economy? The stock market has dropped a lot recently. They've said many times they don't really want to do it into weakness. They'd rather do it into economic strength, not weakness. Obviously, the stock market's not the economy, but you guys know what I'm saying. All right. So those are my general views right now on the Fed, on Bitcoin, and on monetary policy. Again, just to reiterate, what happened last time was a bounce on the announcement of a slowdown, a little bit of weakness a week or two later, followed by a stronger bounce. That's what happened. That does more or less fit with the narrative we've talked about of, this window of weakness in late February to late March. And it's possible it could go into early to mid-April, but it's not something I'm married to. I'm fine with it happening sooner. I just want you guys to know that sometimes it can persist longer if the climate allows for it, if the economic climate or the whatever's going on politically, if it allows for it, the macro environment. But we'll see. We'll see how the next week or two play out. And as I've said before, with Bitcoin, some of the main areas to watch for right now, I think, for Bitcoin are obviously you have the bull market support band way up here, which is still pretty high. The 20-week SMA is moving up pretty quickly right now. It's going to take a while for it to actually start to really drop because you're still getting weeks way over here. If you go back 20 weeks, I mean, that was not that long ago. I mean, I know that sounds crazy, guys, but the price of Bitcoin 20 weeks ago was around $67,000, right? I mean, again, just to have some perspective on the market. But I think some areas to keep in mind right now for Bitcoin, if you look at CME Bitcoin futures, there's actually a gap at around 87K. I'm not really much of a gap boy myself. I know a lot of people got left in the dust back in 2020 waiting for the gap at 9K, RIP gap boys. But I do want you to be aware that there are a lot of people talking about the gap at 87K. Keep an eye on that. And then also the main area to the downside to watch for, if there is more weakness, and this is not the low, would of course be the 2024 high, which again, in 2017 is where the market ultimately found support, right? So that was where the market found support in 2017. If you go look at Bitcoin USD, and we go take a look just really, really quickly, and then we're going to wrap this up. In 2017, Bitcoin found support at that level, if it ever loads. So Bitcoin found support at that level in 2017. Of course, the time it found support there was actually in January. In March, it was a higher low. I think the main difference between 2017 and 2025 is that at least in 2017, there was a rally in February, so that the March drop was a higher low. This cycle, there was not a rally in February, so the March drop ended up being a lower low. But ultimately, what happened back then was that Bitcoin tested that high. And as long as the market stays above that level, I mean, it even wicked below it, right? As long as the market stays above that level, I think you argue that the structure of the market is still intact. If it goes below that level, that would indicate something different. But anyways, guys, that's my opinion for now. Let's see what happens. Let's see if it plays out like the last time the Fed made this similar announcement. An initial move up, a little bit of weakness a week or two later, followed by more strength about a month later. All right, so that's what happened last time. Unfortunately, alt Bitcoin pairs bled no matter what. What else is new? That's what they do best. We'll wrap it up. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up. Again, we do have the bracket challenge going on. Winner gets 1 year subscription to ITC Premium. Check that out in the description below. I will see you guys next time. Bye.